Hey, hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at the technical charts and try to understand what happened in the market during the previous week, and also plan for a better trade plan for the upcoming week that's starting tomorrow, December 16th, 2024. So let's get into the charts. This is a bird's eye view of Nifty. In the weekly charts, and then the right side you have the daily charts. So it clearly shows it's moving within two trend lines, almost like a parallel channel, and it was correction that was happening, and since last 4 weeks it has been trying to recover, and almost half of that is done, and seems like last week was very volatile looking at the wick size. On the right side, intraday, if you see, most of the previous weeks, 4 days, so up till Friday. Until Friday, it was all kind of mostly flattish, but with some weakness. And then it went suddenly volatile, where it broke all the supports, the 50, 20, 100 and all that, and then quickly recovered and then broke out. So that's the kind of action that you see. Similar thing happened on the Banknifty as well. The Banknifty, you can see an ascending wedge which has been narrowing, and exactly the bottom of that is where 4 weeks back where the recovery started, and then now it's heading towards the top of the narrow channel. It may not go too much outside of that wedge, most likely, right? But it's heading towards, looks like Banknifty is heading towards another all-time high. That's a weekly of the Banknifty. Meanwhile, on the daily of the Banknifty, you see that it has bounced up and recovering, and then much more stronger than the Nifty. Banknifty is steadily going up towards the top of that channel, trend line channel, and very close to the all-time high. That's a good picture. So it was overall, end-to-end, week to week. If you look at it, it's just 100 points up. That's less than half a percent point, 0.39% up. And Banknifty, on the other hand, was flattish but managed to close positive 0.15, very flattish, just 82 points gained. Remember, we had 11.5% correction so far on a 72% multi-year rally, and that is going on even now. And Banknifty had corrected last time only 8.6 compared to the 11.5 correction that Nifty had made. So that's the summary of it. It was a volatile week, a flattish close mostly on both indices, a very volatile one, especially that volatility came after 4 days of doing nothing, and then big explosive moves up and down, very volatile, but finally managed to close quickly. So candlesticks, if you see, this is the weekly candle, so it's a hammer on both indices, Nifty and the Banknifty. Hammer could indicate a reversal, sort of confirmed reversal, could indicate a reversal when it is in the top of the trend or bottom of the trend. Right now, we're not really on the top of the trend, so we may not have any relevance. But Banknifty is very closer to the top of the trend, but not exactly the top of the trend. So we can ignore that unless and until the law of the hammer is breached. Until then, we don't have to worry about the candlestick pattern. But the wick size of this hammer indicates this tussle between the Nifty and between the bulls and the bears that happened on Friday, right? Long wick size, and good supports are seen near the 24,000 and near the 52,000 from where Banknifty did that quick recovery. Very good support is what we can make out from there. So, and also, if you consider the wick size also of the previous week's bullish candle, you can see that it's an inside bar, almost like an inside bar, which means market is still consolidating or ready to break out, but not yet broken out yet, unless it goes above previous week's candle high, which would be about 54,000 on the gate of Banknifty, and it would be about the 25,850 or something, right? So that's where we are. It's a green hammer, which is positive and which is consolidating inside the previous week's big breakout, ready to take out the next up move and also you can make out Banknifty is very close to the all-time highs, and that itself can act as a resistance, while Nifty is at a previous zone of resistance right now near the 25,000. Let us see whether 25,000 gets taken out and when the candlestick is formed in the green gray above that or not. Otherwise, it can turn out to be a change in probability on the downside bearish. Right, so it's a resistance zone, very crucial. Same the case with Banknifty also. Banknifty had reversed from this point, all-time highs earlier, and now this is the same place with Banknifty once again. So, got to be cautious. On the daily candlestick patterns, you could clearly see that 4 days it did almost nothing, but it was weak, slightly just sliding down. Similarly, in Banknifty also, 4 days of last week it was doing nothing, but slightly weakish. But on Friday we had a very, very violent move with a V-shaped recovery and then breakout, as if it was an election event or a big major event. Well, there was no event like that. Despite having an event, we had a very violent wick, long wick sized hammer and a big volatile candle that you can see. Right, so that's something that you can, and right now it seems like there is a inverted head and shoulder in the case of Banknifty, which is bullish. That breakout can go up towards the 25,300. And also there is a flag breakout that's already kind of confirmed in Nifty and the Banknifty both. So that's both bullish nature. Here, if you look at the Bollinger Bands, you can see that it's an expansion that's happening on the upside on Nifty and the Banknifty. Expansion upside moves, price could further move up, and it is bullish bias because it's above the median of the Bollinger Bands or the 20 exponential moving average, much above. So absolute bullish Bollinger Band movements is what it's indicating. Let's wind it up once again. So hammer, 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 hammer. Daily, weekly, Nifty, Banknifty, all right. And it was that's just both of them managed to close above the 20, 50, 100, 200. These are considered the resistances on the journey upwards, and the flag breakout is what hammer, inverted head and shoulder, and flag breakout is what is happening right now. Banknifty is very close. So we covered that Bollinger Bands are behaving bullish, right? Let's move ahead. So if you look at the momentum indicator RSI, we can see that momentum on the left side we have the Nifty daily and Nifty weekly, right? So you see that momentum is not yet bullish. That means above RSI 60. It has not gone above that in the medium term or the weekly charts, but short term it's already there. In the Banknifty, it has climbed above the RSI 60 and is bullish. So momentum is absolutely bullish in Banknifty. Nifty is reaching there. And for the trend indicator, we are using the ADX, which indicates that it is medium term bullish on both indices. But in the short term, it is still negative. It has crossed out the negative zones and not able to cross over back. So there is a slight trend crossover that is required for it to turn bullish, but momentum wise it is almost done that. We have 50. That's a summary. Now the volatility indicator is the India weeks. The fear and greed indicator has finally last week cooled off 7.4% after all those elections in the November and Fed rate cuts and RBI rate decisions and all that. So finally it has come to 13 after a long time. That's October low after hitting a high of 16 or 17, I think, in the November. So it's cooled off substantially. Nearly 20% of cool off has happened in the 2 months, and that's positive. The fear factors have reduced. This one is probably sitting ground for the up moves. That's about the volatility, momentum, and the trend. Now we look at the open interest analysis. The open interest of options and open interest of the futures. The futures open interest is showing that it's a short covering built up on Friday. There was a big recovery and breakout, so that's positive. That's bullish. And open interest of the options for the Nifty weekly December 19th and the December 24th monthly Banknifty expiries can be seen here. The PCR is almost bullish in the case of both. The Banknifty is not fully confirmed the bullishness because it's less than 1. The put call ratios as such, if you see, but you will see that the resistances are very clear, right? The levels of resistances is 25,000 in the case of Nifty for next week, and then 25,500. The second highest call rating is seen there. But the highest support is seen at 24,500. Second highest support is at 24,000. Where the highest put rating is seen. Similarly, the Banknifty, that's for the monthly. We have a very wide range of 1,000 points. So 53,000 and 54,000 is where the highest put and call rating is seen. Second highest put and call rating is at 52,500 and 55,000. That's a range that you get from the monthly. Okay. The rest we have seen. Now, looking at the operators is one way of identifying the support and the resistance levels while we're placing a bet. But we can alternatively also look at the technical charts and use the previous resistances, the previous swing lows, the gap resistances, or the Fibonacci, the rounding numbers. All of these techniques can be used to identify levels. We have to correlate both of these, then come to a conclusion where we can place the bets for taking either long or short bets. So these are the charts from both these Nifty and Banknifty resistances and supports are derived from. So briefly, if you look at it, you can immediately see that there is a previous resistance that's coming at 24,900 zone. So that is clear. The rounded number is coming at 25, which is also a previous resistance zone, and after that you have 25,333 resistance, and then it goes towards 25,800 where a gap resistance is there. Long way to go in order to hit the all-time high. But Banknifty, look at this. It's very close to the 54,500 where they have the all-time highs. Before that, it has to take out the 54,000 rounding number, and then there is some cluttering. At the 53,700 to 54,000. That's where the breakout really gets confirmed if that is taken out, right? So downside, 20 expansion moving average support is at 52,661, then 52,600 has got this 50 expansion moving average, and 50,000 rounding number has got a previous resistance zone, and then it's also a rounding number. So 100 expression moving average comes 400 points below that at 51,600, and then total expression moving average is set closer to 50,000. It's 50,200 nearby, 5187 to be precise. That's support resistance levels. That's not really making a note of this. PRs, price resistance, DMAs, daily exponential moving average, RN is rounding number, PSL is previous swing lows, Fib is Fibonacci 38, Fibonacci 50, all that, right? Let's make all of these, and then those are derived from these charts. Let's move ahead to see the sectorial indexes. So it was the IIT that made the big move, nearly 3%, 2.7% up last week, and that's the only sector that's bullish and ripe enough for longish bets. Bullish in the sets of momentum is bullish in the weekly and the daily. The IIT sectorial indexes, Nifty IIT. Now, if you look at all the other sectors, other than the metal and the reality, you can see auto, pharma, and FMCG all have given some of the gains that previous week, right? So it's down by 1% in auto, 1% more, slightly more in pharma, 1.5% against FMCG. It's a reality that's slightly spiked 1%, but still they're all not right enough for taking longish bet with respect to the momentum. The charts of the sector analysis are here. It's really a breakout that's happening in the IIT index with bullishness in the momentum and the trend indicators. Very clear. And the metal had been correcting, and then it's given some showing some up move in the momentum, but it's still sideways and rising up in the medium term momentum charts. Our index has also been correcting and consolidating, taking a support at the RSI 40 and then trying to move up. Pharma also has corrected quite a bit and trying to climb back into the bull zones, but still not yet happened. FMCG also has corrected substantially. In fact, it gone down to the bear zones and then climbed back previous week to the bull zones. And not the bull zones, the sideways zone. So it had done the correction and then climbed. The recovery is really seen. That was the most weakish sector in indices, FMCG. Probably because of the inflation, but no reason, all that. Well, the realty sector had managed to climb above the bull zones once again on the medium term, and then forming a flat breakout, and there's potential for more up move. There is actually potential for more up move in all of these: the metal, auto, FMCG, pharma, and reality. All of them, except for the reality, pharma, auto, metal, and FMCG have corrected substantially. Right? So nearly 20% or more correction has happened. It's consolidating now, and if the market moves up, these can retain all that what is lost. So there's potential for all of these to climb up. As of now, the main factor is sector indices have recovered. Now looking at the heavyweight stocks that contribute maximum to the dice, the heroic stocks, what he calls, right? The 7 big stocks that contribute maximum. First comes in the HDFC Bank, and it has had broken out after a long time and shown some green. It's very close to the 1900, close by, with big volumes, big momentum, and trend indicator. So that's the one that's holding the market, and that's one that's holding the Banknifty also. Reliance is showing some trouble. It had attempted a recovery during the last 3 weeks, but previous week it gave up that, and then it's taken a hit at momentum resistance RSI 40 and then going down. So there is every potential that it can further correct towards the channel bottom at 1100. That may be an opportunity for a very short trade on the short side, and also it may be an opportunity to buy in the dips. ICICI Bank, clean again, are heading towards the top of the channel, and it has been bullish. The most bullish stock, I can say, during this bullish rally of multiple years, 2 years or so. This has been the most bullish, and it continues to do so. The momentum is absolutely bullish. So ICICI Bank still seeing strong. Clients having trouble. IT stocks in few in the TCS are breaking out, no doubt about that. Infosys is having a couple handle breakout. TCS also climbed to the bull zones, and Kodak Bank is a consolidating forever stock and continues to do that. ITC right now sideways, going on the corrections, and it's a couple handle that's getting formed. It has been a stock that never moves for multiple years, and finally it broke out 2 years back, and it had a very good rally, moved from the 300 ranges towards the 500 ranges, and now making some corrections on profit booking and all that. So it's going sideways. So what's holding the market is the IT stocks and it's the banks, HDFC Bank and ICICI Bank. Top stock is Reliance. And that's about the index heavyweights. Now look at the broader market. The mid cap index and the small cap index are doing good, have recovered along with the main market, and once again climbed back to the bull zones. And it's facing some resistance heat near the all-time highs, especially the small cap. So that's positive that the market is also moving. But yeah, the full recovery has happened actually in the case of both. After 10 or 12% of correction, very good recovery in the broad markets. How did the foreign institutions and domestic institutions participate in the market is what we can see from this figure. So you see that FIs has some small buyings that has come in, but they have definitely paused the buying, paused the selling. The FIs have paused the selling since last 2 weeks. Previous week they had ended up net weekly positive, and this week you can see that there's less selling that has happened, which is itself is positive. But domestic institutional money has been flowing in, and this week also another 3,000 crore of support buying has happened from the domestic institutions, and derivatives on the net longs on domestic institutions and foreign institutions have also moved up. So that way it's positive that the institutional money is flowing. Now let's look at the global markets, especially the US markets, the currencies and the other commodities like gold and crude. Dollar index has been spiking up ever since the new president has been selected, and it's another 1% move. It's at dollar is at about 5.97, and rupees at the weakest level, where the US dollar currency pair also spiked up to 84.76, historic low OP. That's not very positive news. Dollar spiking is not that great news. Rupees weakening is also not a great news for an emerging market like ours. Now the crude oil has been under control, falling below the 7, and even now it's okay, but last week we had a big spike of nearly 6%. It's bullish and rising. It's not bullish actually, it's sideways and rising momentum. So that's okay. It's not bullish yet. So, but the candle that you see is super bullish. So, oil is under control as of now. Gold, on the other hand, is not ready to move down further. It had done some small corrections after hitting the all-time high at 2785, and it is consolidating. It tried to move up and ended up with a small body in decisiveness. And the gold is, when the dollar is strengthening, gold is not likely to strengthen at the same time. But gold is not ready to keep up dominance of a big 28% move that it did in the 2024. It's holding on and then trying to hold on to the bullish momentum. That's what I see. Because this week we had 0.5% up. After trying to move further, it got into some profit booking, and yeah, it's a 70% rally that you see all from the very swing lows. The US market is showing some mixed bag, but overall it is bullish, very close to the all-time high. And although the Dow Jones and S&P 500 are close red, slightly very close to the all-time high, the Nasdaq did well and closed green. Overall, you can say it's in red, but it's very close to the all-time high. So Dow Jones nearly 2% down, 1% down, 1% down, no, 0.65% down as S&P, but Nasdaq is nearly 1% up. So momentum is bullish. That's what matters, and it's very close to the all-time high even now. So that is one way positive, right? There's a lot of space to break out towards the top of the channel in the case of Dow Jones. Probably it's making some profit booking. You can see the RSI momentum is bullish, so no worries about that. And as that has been breaking out, that is reflected in our IT index as well. That's about the global markets. Just to wrap it up, the dollar strengthening is not great news, and rupee is getting weaker and weaker each day. Crude oil under control, but a spike has happened. Gold also consolidating at the very top, not ready to fall down. The US market slightly profit booking red, but overall momentum is bullish. Let's get into some actionables, and the long side bet that we have is Angel One. It's not a recommendation, it's just for education purpose. Angel One is a stockbroking company. Good volumes, momentum climbed to the bull zones, trend is rising up bull zones. Reasonable risk reward of 1:2 is possible towards the all-time high. Surrounding pattern, parallel channel, combined breakout, mostly confirmed. Have tight stop losses low. Right side, it's a couple handle breakout on the Infosys. It's almost confirmed. Good risk reward can be achieved. 700 points moves for a portion that is possible, but this is a swing trade that is put in here. There is some divergence in the momentum, so you have to be cautious. The moves may be volatile. So I have type stop losses and re-enter if you want, but it's a pattern, very good pattern with good volumes, good momentum, good trend that is seen, and that could be potentially a good opportunity for breakout. The index also is breaking out, Nasdaq is all-time high, so Infosys could do much better. No, it's a long opportunity on Infosys and Angel One. Next, we have an FNO strategy weekly on the Nifty. It's a call ratio spread where you select OTM, where you buy OTM call, and for OTM call we sell, and we sell double of what we buy. That way, we're completely protected on if the market falls, and if the market does not break out once again with the big way, as long as that does not happen, it should be fine. As long as this 350 is not taken out, you're fine. But get out immediately, or once the neckline of that payoff charts breaks, just get out. Yeah, good probability of profit, good risk reward, but get out not on the last day of the expiry, but before that. It's not completely risk defined. One side is up, and on the upside there is some risk element, so you have to be cautious. So you have to make sure that you get out, and you should not get trapped in a gap up or a gap down or a gap up. So once you feel that the market is getting closer, and then the candlesticks indicating that a breakout could take out your range, then get out. But so the probability is good, and the estimated margin is very less, and then but it's still not completely risk defined like an iron condor or iron fly. It's not that. You have to be cautious. So that's FNO strategy. Call ratio spread on the Nifty weekly charts. Let's just wrap it up now that we have some actionable sell here. So market moved weakish flat most of the days last week, and then suddenly on a Friday went very volatile, dipped and recovered quick fast. First half was a dip, and second half was a recovery and a breakout. And it finally managed to close positive after 4 days of doing nothing, weakish flat. And it managed to close positive both indices. Banknifty also. Banknifty is much stronger. Banknifty corrected lesser as compared to Nifty in this last correction. And FIs are not selling too much. Yeah, that's what we are. Let's try to bucket over the factors that's in favor of the bulls and the bears, and we see that the FIs oppose the selling, although net to net they are negative this week also, which has cooled off finally 7.5%, and then now in the 13 levels. And US indices are very close to the all-time highs and profitability is there, but still the market is bullish. And these are all factors in favor of the bulls. And Nifty has cleared all the 20 exponential moving averages, although it reached that during the volatility on Friday. Uptrend in futures is bullish, almost, with a short covering built up, and uptrend PCI is also bullish enough, although Nifty is absolutely not bullish about 1 PCR, but very close to that. So head and shoulder pattern and flag breakout is seen on the daily charts with north indices. Japan's expanding on the upside. Heavyweight stocks have recovered the sideways momentum. Sector indices also recovered, even the FMC has climbed in sideways. So all markets have recovered completely and at the all-time high. But what's in favor of the peers? If had been selling, they're not really buying full-fledged yet. And they're not buying consistently also. I'll be cautious about that. And it's the Christmas times and it's holiday times, and they would sell it off home and then go home or go on a holiday. So that can happen, or they may already have left for that, you never know. But volumes are likely to reduce from the institutional side during this holiday season. The previous resistance zones are there as a Damocles sword on both indices, Nifty and the Banknifty. Banknifty has got the all-time highest resistance, and Nifty relatively weaker than the Banknifty is also having more resistances to clear before it reaches the all-time high or breaks out from there. Long way to go for the Nifty, so you're cautious about that fact. So always keep in mind that when there is big volatile swing, black swan events and all that happens, in technical analysis may not have much of a relevance. You have to keep that in mind. It's only a study of probability and not a confirmation. So technically, I'm mildly bullish. Look at the charts and all the different factors that we discuss. You could vary your opinion depending on your analysis. So the levels that I look forward is 23,000 and 25,500 range, a wider range. And that's for the Nifty, and 52,000, 54,500 is for Banknifty levels that I look forward. So as well as this 26,000 and 54,000 is cleared comfortably, that's where the next leg of rally can be anticipated. Until then, we have the risk of market pausing and reversing back once again, or moving sideways for a longer period of time. All that possibilities are there, keep that in mind. So don't take overnight risk. Can always hedge your positions as well as a portfolio. That's a must, because the capital is all that we have. Right? There are ways and different option strategies where you can make rental incomes even while investing. Look at the playlist, a lot of option strategies there. Check out that. That's all I have for this week. My bullish view, and that's based on hundreds of different parameters that we studied during the last 30 minutes. And if you like the content, subscribe and hit the like button if you like it, and then put in your comments, feedback, and all that, and share it with your friends if you may like. I'm also active in the other channels like the X and Twitter or whatever, and daily analysis I put in there. If you want to subscribe to that, you can do that as well. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.